All right, today we are diving deep into one of the biggest updates for families in years, the complete overhaul of the adoption tax credit for 2025. If adoption is even on your radar, you absolutely need to understand how this new system works.
So let's get right into it. This is not just a little tweak to the numbers we see every year. The bill behind this, sometimes called the One Big Beautiful Bill, actually changes the entire engine of how this credit provides financial support. Getting a handle on this new mechanism is going to be crucial for anyone thinking about adoption.
To really get why these 2025 changes are such a game changer, we first have to talk about the fundamental problem with the old system. For years, the credit had this major catch that really limited how powerful it could be for a lot of families.
I mean, let's be real. Adoption is an expensive journey. You've got court costs, agency fees, travel, it all adds up fast. The tax credit was created to help with that burden, but the way it was designed actually had a pretty big flaw, one that unintentionally put up another wall.
And here it is, this was the catch. In the past, the credit was 100% non-refundable. So what does that mean? It means it could lower your tax bill, sure, but only down to zero. If you didn't owe a lot in taxes, which is the case for so many middle and lower income families, you just couldn't get the full value of the credit. It was right there, but you couldn't touch it.
Okay, so now let's talk about the solution. The new law for the 2025 tax year brings in a really powerful change that goes right after that core weakness of the old system.
And this new law, it's not just an update, it's a total transformation. It creates a brand new mechanism that basically unlocks the credit's value for a much wider range of families. It really makes it a more effective and honestly a more equitable policy. So the whole thing hinges on this one sentence right from the IRS. For the very first time, a chunk of the credit is refundable. And that simple switch from non-refundable to partially refundable, it completely changes the financial impact and how useful this credit is for family. So this new structure creates what we can really think of as a hybrid credit. It's a mix of two totally different kinds of tax benefits, and figuring out how they work together is the key. So let's break down exactly how it works. For the 2025 tax year, the total maximum credit is going to be $17,280 per eligible child. But the really fascinating part isn't the total number. It's how that number is now sliced up. It's not just one big block of credit anymore. And this chart illustrates that new hybrid model perfectly. The total credit is split into two very distinct pieces that follow different rules. You've got a $5,000 refundable piece and a $12,280 non-refundable piece. Each one works differently, and that means you have to think about them differently. Here's probably the easiest way to think about it. That $5,000 refundable part, that's a cashback bonus. Even if your tax bill is zero, the government sends you a check for that money. But the bigger, $12,280 non-refundable part is like store credit. It's great for wiping out any taxes you owe, but you don't get any of the leftover amount back in your pocket. Okay, so now that we've got the mechanics down, let's talk strategy, right? Understanding the rules is one thing, but knowing the little levers you can pull to really maximize your benefit, that's the real goal here. These are the actionable insights you're going to need. Now listen up, because the order of operations here is absolutely critical. It's a huge compliance point. If your employer offers any tax-free adoption help, you have to subtract that amount from your expenses first. Only after that can you calculate your credit on what's left. The IRS is very clear. You can't double dip on the same dollar. When you claim your expenses is another huge strategic decision, and it all depends on the type of adoption. For domestic adoptions, you've got some flexibility. You can claim expenses as you pay them, even before it's all finalized. But for foreign adoptions, the rule is totally rigid. You have to wait and claim everything in the single year the adoption becomes final. Now, this slide has some of the really important expert-level details. First, And this is a huge one. For the adoption of a child with special needs, you can claim the absolute maximum credit even if you had zero out-of-pocket expenses. That is a powerful rule. Second, remember that store credit, the non-refundable part? You can carry that forward for up to 5 years. But the cashback bonus, the refundable part, is use it or lose it for that tax year. And finally, keep an eye on those income limits. The credit starts to phase out if your modified adjusted gross income, or MAGI, goes over $259,190. All right, so let's zoom out from all the tactical details and just look at the real-world impact. Why is this move from a totally non-refundable credit to this new hybrid model so important from a policy standpoint? What does it really do? Well, the cause and effect here is just crystal clear. The old system, being non-refundable only, put up a barrier for families who didn't have a big tax bill. The new hybrid system, because it introduces that refundable piece, directly leads to a much more fair, more equitable distribution of financial support. It makes sure the credit actually helps a wider range of families. And really, that's the bottom line. This is so much more than just a few lines of tax code. It's a really meaningful policy shift that helps tear down one of the biggest walls to adoption, the cost. It just makes building a family through adoption a more financially realistic path for so many more people. And that kind of leaves us with one final question to think about. By making this critical financial support so much more accessible and effective, how might this one single change to the law reshape the entire landscape of adoption in America for years, maybe even decades to come? Thanks for tuning in.